The reason Meta Platforms is offering long bond. And Palantir just sold their gold. What is the big tech data telling us about the direction of interest rates? Last August, Facebook, parent Meta Platforms, had raised $10 billion in first ever bond offering. The offering would help Meta, the only one among big tech companies without debt, on its book back in August of 2022. To fund its metaverse, of course. This May, Meta to raise another $8.5 billion. In second bond offering, Palantir just sold all of the gold bars it purchased in 2021 for $51.1 million. A slight gain from its $50.9 million investment, according to CNBC. Why now? Meta was once a debt-free company. Now they have $28 billion worth of debt. Why do they need to add so much cash today? Why they need to borrow cash at today's interest rate? Does Palantir know that gold price won't go up anymore? If so, what's that telling us about where the interest rate is going? I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back everyone to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video, because you're already a success. It is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit, like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the Audacious Money Witch Club, don't you? Fed's cash carry just said, my guess is once this period of high inflation ends, that we will be back in low inflation and low rate environment. I don't think that it's that easy. Look at where we are now. CPI in April was still at 4.9%. It barely dropped any from 5% in March. This feels like a near-term bottom, even though yield curve has been inverted for a long time now. Conventional thinking doesn't work for unconventional times, wishing for deflation to magically disappear. The present raft of troublesome economic issues is not a good strategy. It falls into the same bucket of misplaced hopes. As central banks telling us how transitory inflation would be last year. Let's just say inflation magically dropped back down to 2%. And the Feds dropped the rate quickly this summer. Then why would Meta just issue international bonds in the amount of $1 billion, $1.5 billion, $1.75 billion, $2.5 billion, and another $1.75 billion, maturing in 2028, 2030, 2033, 2053, and 2063, respectively. On May 1st, 2023, issuer Meta Platforms released international bonds in the amount of $1 to $2.5 billion, with the coupon rate in a range of 4.6% to 5.75%, maturing in 2028 to 2063. The issues were sold at the price of 99.702% at par. The book runners of the placement were BofA Securities, JP Morgan, Morgan Stanley, and Citigroup. Essentially, Meta Platforms just issued $8.5 billion of long-term bond, and they are planning to pay the bondholder around 5% annual yield for 5 to 40 years in the future. Naturally, the longer the maturity, the higher the yield. It's not inverted like Treasury. S&P Global Ratings on May 1st assigned its AA- issue level rating to Menlo Park. California-based Meta Platforms Incorporated proposed senior unsecured notes. If interest rates were to drop, then these Facebook bonds would be worth more, as the new bond will be yielding less interest. But Meta will be stuck paying higher interest rates for many more years and decades. As for Palantir, they sold all of their gold bars this week. Does that mean that they think the gold price has peaked? In my opinion, yes. I think that they have live economic data to support that view, that they think that gold has peaked. Because, ironically, gold doesn't do well in inflationary times. When the bond yield rise, inflation rise. Gold price drops. Because people need liquidity to buy food and gas, so they sell some of their gold. Gold price only jumps higher if the Fed turns its printer back on. The April's inflation report reinforces the Fed to do a pause. Federal Reserve officials were already leaning towards taking a summer vacation from interest rate increases to see if they have already done enough to slow the economy and inflation. Wednesday's CPI report makes that easier, because it showed price pressures aren't worsening and might soon be slowing as muted growth in rental housing costs feeds through official inflation gauges. The reason why Palantir sold their gold is not because they need the cash, but because they believe the gold price has peaked, because of either inflation or deflation is going to happen soon. Both of the outcome will result in lower gold price. In deflation, people sell their gold to buy other assets because these assets are being discounted heavily. Treasury bond prices will drag gold prices down. Speaking of Treasury, long bond TLT has been going on sideways action since the beginning of the year. It's getting closer for the bond market to make a decision where to go next. JP Morgan holds massive gold derivative short position. That could be larger than the bank's total assets. Top money managers warn. This is not fraudulent, but it's an open secret. In fact, it's no longer a secret because they've been penalized for it. They're trying to control the price of gold. When a stock or commodity is short sold, the short seller is on the hook for delivering that stock or commodity at a later date. The goal is to make a profit between the current price and a future lower price. JP Morgan appears to be selling the precious metal short using derivatives, which is effectively keeping the gold price artificially low. Have you ever wondered why gold never gets above $2,200 and silver never goes to $50 or beyond? Because of massive short positions that keep their prices down. How do they maintain these massive short positions? Because the Fed is bankrolling it through its primary dealers, the mega banks that de facto control the Fed. If JP Morgan were in trouble, the Fed would give them a bailout of 100%. And by saying 100%, it's 100% that they will get the bailout. Thus, it's actually the US government that is shorting the price of gold because of that layer of relationship and because of the role of the US dollar. And US Treasury bond need to be protected. The US government loves inflation and hates deflation because of their $31 trillion of high debt load. After 10 rate hikes, we finally get a potential pause. However, that doesn't mean inflation won't be back. In 1970, inflation came back twice. Each time it was higher than the last one. In the meantime, like I said before, stocks could rally until the rate cuts. Today I will share a stock that I recently bought. I don't know if you can guess it or not, but it's in this video already. Yes, you guessed it right. It's Palantir. I recently sold Meta, so I have a nice position with Palantir built since last month. It's already up north of 25% since last month. I am bullish for the short term because they are starting to become profitable. They have $2.9 billion and no debt. Even Kathy Wood has started to rebuy it after she took a loss when she sold last year. What do you all think about Palantir stock? And about where the interest rate is going? Let me know in the comments below. And here is my client's collaboration book, Adversity Equals Success, and it's already yours. Such an amazing book with such incredible authors. Order your copy today. You are such a good boy for watching my video right till the end. Bye.